Looking at the Markets with David Moadel.
Welcome to Looking at the Markets with David Moadel. You know, Goldman Sachs says that we're in the beginning of a commodities supercycle, and I agree 100%. Gold and silver will do extremely well, but if there's one commodity that has the potential to really outperform in 2021, I believe it's uranium. And today I'll be speaking with a uranium market expert, Mr. Scott Melby, CEO, President, and Director of Uranium Royalty Corp. Welcome to the program, sir.
Thank you, David. It's great to be on with your listeners.
Yeah, well, it's a pleasure to have you, a premier expert in the uranium markets. And I know that you're from Uranium Royalty Corp. You're the CEO, President, and Director. If people are interested, they can go to uraniumroyalty.com. Link is in the description below this video. And the stock tickers on the TSXV are URC, and in the US, URCCF. I want to talk about the uranium price. It's trying to break through that $30 resistance level. It's trying to move higher, I can tell. So what will be the drivers of higher uranium prices?
Well, I couldn't agree more with your comment about commodity super cycle. I mean, society's going through pretty profound changes with the move to green energy economy and carbon-free or lower carbon economy. And no commodity fits in that better than uranium. I've been in the industry now 36 years, every aspect of uranium mining, brokerage, trading. I've even worked at a nuclear power plant in Arizona buying uranium. We've always known that uranium is baseload, resilient, 24/7 power with stable fuel costs and no carbon emissions and clean air energy. So it's really been the development in the last couple of years, really, that we're getting more broader acceptance of that from governments, policymakers, NGOs, investment community, and environmentalists that are realizing if we really want to get to a green energy economy, you can't get there on renewables alone. And that's not a knock on wind and solar. It's just the reality that something that runs 25% of the time can't be 100% of our energy. And so, Germany tried that and went down that path and turned their back on nuclear. And it's just resulted in electricity rates, twice that of their neighboring France, that's all nuclear, and 10 times the carbon emissions, because it's just caused them to rely on coal and natural gas from Russia. So we have the benefit of that mega trend in our favor right now. But if you just looked at the commodity from the nuts and bolts of supply and demand fundamentals, we've come off of a 10-year period since Fukushima where we went through a pretty severe bear market. It impacted demand by knocking plants offline in Japan, which are now only slowly coming back online. But we've also seen Germany continue with its phase-out plan. But what's happened in the interim is we've seen 53 new very large reactors come online around the world. We have another 50 in construction. And now we're only beginning to see the tip of the iceberg in terms of advanced reactors and small modular reactors that have so many applications in this economy going forward. If you look at the supply side, obviously a period of low prices like that in any commodity would impact uranium producers. And as their hedges finally fell off, just as recently as 2016, they really started to cut back production in 2017. So over the last 3 to 4 years, we've seen 40 to 60 million pounds of supply come out of the market. So today, globally, all the reactors in the world consume about 175 million pounds, and we'll be lucky if we produce 130 million pounds globally this year. So that's really drawing down the excess supplies and the inventories. And so everything's kind of in place, but you ask, well, why has price not moved, through that $30 level? The next shoe to drop is really the utility procurement cycle. And while their demand for uranium is steady, plants run 24/7, their procurement can be quite lumpy and has really been below normal levels globally over the last 7 or 8 years. So they're now getting to a point, and I think COVID maybe have impacted some of their procurement activities, but they're now at a point where they need to come back in the market and contract, and the supply side is very different than the last time they were in the market contracting. So we're incredibly optimistic for all those reasons and very fundamental reasons.
Yeah, and you alluded to a supply deficit that I'd see being an issue in the coming months and years for uranium, which should drive the price higher, in my opinion. Also, green energy is going to be a big driver. Could we characterize nuclear energy, which has gotten a bad rap from some corners? I think it's a clean energy source compared to fossil fuels. What's your take on that?
Yeah, it's and listen, I think the policy that's been instituted in the Biden administration, I don't think I would absolutely support trying to move away completely from fossil fuels. They're such a big part of our economy, but that is the trend, and that's, they came to into office on day one, rejoined the Paris Climate Accord, stopped drilling on federal lands, and killed the Keystone Pipeline. So this administration is quite serious about it. So. Fortunately, nuclear is clean and green in that regard. And if you look at the United States today, nuclear energy provides 20% of our electricity supplies, but it's a full 55% of our carbon-free energy. So that's greater than wind and solar combined. So not only do we need to preserve and continue operating the existing fleet, we need to look at moving into those next generation reactors and grow the industry going forward. So we really do have a leg up on our fossil fuel brothers and sisters over there. But thank God that we're green energy in a green energy world today.
Sure. Now, your company, Uranium Royalty Corp, is based on a royalty, as the name implies, a royalty and streaming business model. Can you tell us how exactly that works and how your company benefits from that model?
Yeah, so royalties and streams are nothing new, but it's really only been in the last 10 to 15 years that companies have been built around this concept, and it's really become a $50 billion industry in base and precious metals. And many of your listeners will be familiar with Franco-Nevada, Wheaton Precious Metals, Sandstorm, Royal Gold, Metalla. These are companies that have become real go-to names for diversified exposure to particular commodities. And they've also become sort of mainstream, not alternative finance for mine developers, but become more mainstream in companies that either want to develop projects or restart projects and bring them back into production. What's unique is we're the only such company in the uranium space, and we're an industry that has really missed, we've had 10 years of not a lot of new mine development, and with the demand, recovering back to pre-Fukushima levels and growing, uranium requirements growing to 200 million pounds a year in the coming years, we need new mines being brought on around the world. And that's even after you restart some of the low-hanging fruit, big mines in northern Saskatchewan or mines in Kazakhstan where they've really become the leading producer. You still need mines developed in Canada, the United States, Africa, and Australia. So our company really wants to be one of the capital providers to the better companies in the space and see them get into production and be a part of their success. It allows investors to share in our portfolio. We've been quite successful as a young company. We only launched our IPO in December of 2019, but as we stand today, we have 15 royalties and streams in the portfolio. So already as a young company, we've got great exposure to a geographic mix of near-term, mid-term, and longer-term royalties.
Yeah, sure. It's kind of an interesting comparison because you've got Franco-Nevada and Wheaton Precious Metals who have some competition in their respective fields of royalty and streaming business models, whereas Uranium Royalty Corp, really, I don't see a whole lot of competition there. And I think that you're a pure play as far as uranium royalty and streaming goes. Would you agree with that?
Yeah, it is. It's an ideal position to be the only pure play uranium royalty company for now. I mean, that won't be forever, but in gold and precious base metals, there is a lot more competition for available assets. As it stands today, we do have a leg up. I think we could face competition from diversified royalty companies, but we're a company that's been founded and is being run by uranium people. We've discovered deposits globally. We've built mines. We've operated some of the largest mines in the world in our previous employment. So we get the challenges, but we also get the opportunities. And investors that have, in previous uranium cycles, there's a lot of investors that have made a lot of money in the uranium space, and I think they're excited to see the fundamentals finally work their way through and get back to a point now where I think we're in the early stages of a bull market that will be very exciting for us in the industry and building this next generation of mines, but also investors.
Yeah, it is exciting. And there are some, speaking of investors, some very well-known names in the commodities space who are major shareholders. We're talking about companies and some individuals as well, shareholders of Uranium Royalty Corp. Would you be able and willing to divulge some of those names?
Sure. Well, we have some significant, I would say, corporate shareholders that helped found the company, the most significant of that being Uranium Energy Corp, of which I serve as Executive Vice President. It's a U.S.-based uranium producer out of Texas and Wyoming. But we got together with some key resource investors a little over 4 years ago and really founded this idea. Uranium Energy vended in assets and provided some of the sweat equity in terms of management and back office support to get the company running. We also have Altius, which is a very significant royalty company that vended in a royalty and is holding our shares today. Same with Mega Uranium, all corporate shareholders. But in the resource space, we have some very big names backing us, like Rick Rule, Marin Katusa, Darren Millmeister out of Extract Capital, and Warren Gilman out of Hong Kong, that all really see an outstanding opportunity here to deploy this concept in uranium.
Absolutely. And speaking of name dropping, if you don't mind, just a little bit of it, there's a director at Uranium Royalty Corp, Mr. Amir Adnani, an absolute mastermind in the markets and in the commodities space. What expertise does Mr. Adnani bring to the company?
Yeah, it's, he is really the entrepreneurial kind of vision and passion behind a number of successful companies in gold and uranium space. But his success is really always grounded in this notion that we have to embrace the inevitable cyclicality of commodities. Forever we've seen the cycles in commodities, and that's the normal economic ebbs and flows of supply and demand that cause these uranium cycles. But rather than sort of wring our hands when these commodities go through their periods in the valley, that's when Amir gets most active, and we go out and we acquire assets at the bottom of the cycle. And then while we have the luxury of time, permit, license, drill out, and even develop and bring towards production these assets. So when the commodity cycle's back around, we're able to capitalize and we're not out of sync with the commodity. So, he sees Uranium Royalty as an opportunity to really provide financing for a lot of these new mine developments when we're still not at a period where the incentive prices for bringing these mines forward is clearly evident. Uranium prices at below $30 a pound are well below the sort of $40 to $50 a pound that the world's best and most competitive mines need as an incentive price. And some larger mines that require hundreds of millions of dollars of capital and long permitting and construction times, probably need $50, $60 or higher. So he's just recognized the opportunity, and we really benefit from his energy and passion. We also have some key people. We don't have a big organization, and that's the nature of royalty companies, because we don't own the mines. We don't have to have the huge headcount and G&A and everything that goes with an operating company, but we have to be very good at due diligence. So we have 20 plus year veterans of Cameco Corporation, I included in that, but we've got our chief technical officer that ran global exploration for Cameco for over 20 years. And one of our board members was VP of mining for Cameco and actually ran these world-class mines. So it's critical that we go out and we see the universe of potential counterparties, and we evaluate their geologic data, their mine plans, the engineering plans, country risk, ESG considerations, and we try to align with the best companies in the space, and then our shareholders in turn benefit from that.
Yeah, and you mentioned that Uranium Royalty Corp doesn't have to own those assets, those uranium assets, and I actually think of that as an advantage, just like I do with Franco-Nevada, Wheaton Precious Metals. You get to capitalize on the gains and on the profits and revenues without having to necessarily incur all the costs involved, and that's what the royalty and streaming business model's primary advantage, I think, or at least one of them is to me. Now, can you just really quickly please go over the main highlights of Uranium Royalty Corp's portfolio?
Sure. So, as I mentioned, we have 15 royalties and streams in the portfolio to date. We've tried to really be geographically diverse. So, I would put it into several buckets of U.S. operations, which we really like, given the politics. It's funny, uranium and nuclear energy is probably one of the few things that Republicans and Democrats actually agree on these days, as we saw enormous support from the Trump administration and the Department of Energy really promoting advanced nuclear and small modular reactors and taking steps to help the domestic fuel cycle, including uranium mining in the U.S. So we got the benefit from that. There's even a strategic uranium reserve that's being established to give a stimulus to revitalize the domestic uranium industry. We're invested in that industry through various royalty positions. We also think the Biden administration now, as we've already mentioned, with green energy focus, should continue these pro-uranium, pro-nuclear policies. So we're well positioned there. We love the Athabasca Basin of Saskatchewan. This is sort of the Saudi Arabia of uranium in terms of high-grade, massive deposits, quite complex to mine, but ore grades that are in many cases 100 times the world average. And so one of two of our big announcements in the last 2 weeks was an acquisition of royalties on Cigar Lake and MacArthur River. These are the best and biggest mines in the world. So not only do they bring marquee value to the portfolio, but they also bring visibility to near-term cash flow and revenue. Now, presently, both those mines are in standby. MacArthur River voluntarily, by their operators Orano, the French, and Cameco in Saskatoon, Saskatchewan. They shut this mine in to help rebalance the uranium market more quickly by not putting pounds into the market at the low point in the cycle and buying off the market to try to accelerate that rebalancing. Cigar Lake is down because of COVID concerns. They restarted, they shut down once in 2020, restarted and shut down again because of the incidence of COVID in northern Saskatchewan, and they really have a high standard in terms of health, safety, and environment, and didn't want to impact negatively the communities around there. The good news is these are two mines that are probably the earliest to restart when COVID is under control in Canada and uranium prices recover. So we'll begin to see very nice cash flows coming from these assets really quite significantly by, I'd say, about 2025 in a $50 plus uranium market could be north of $6-7 million. So it was a great size acquisition. It was $10 million in cash, $1.5 million in shares to get interest in two of the best mines in the world. But we don't stop there. I mean, we've got physical ownership of uranium through our foundational shareholding in Yellowcake PLC, is a company traded in the London Exchange that buys uranium, warehouses it on behalf of investors, allows investors the speculative vehicle. But with a 9% interest in that company, it essentially gave us exposure to $20 uranium when we were part of their initial IPO launch 3 years ago. Also gives us access to physical uranium under their contract with the world's largest producer, Kazatomprom. And then additionally, we have interests in Africa, in Namibia, in Southwest Africa, where we have a royalty on the Langer Heinrich mine, which is probably one of the earlier movers and restarts. It shut in similar to MacArthur River to the low uranium price, but they took the extra step as well and went to streamline and create efficiencies and lower their operating cost when they do come back into production, which I would expect in a $45 market or that neighborhood, we would see Langer Heinrich come back on. So again, we want to be aligned with mines and developers that can be cash flowing and producing in this cycle that has now begun. But we also are invested in midterm royalties, and even some longer dated ones, which are quite affordable to acquire today, but give it a very large exposure to a lot of pounds, maybe 10 years down the road, when some of the current generation of mines are playing out and these mines start ramping back up. So for a young company, we're quite pleased with the diversity and the range of assets in the portfolio.
Yeah, I think it's a great strategy. I just read that a major producer in Kazakhstan is extending uranium production cuts into 2022 at least. So I am so glad that Uranium Royalty Corp is extending into geographies such as Canada and Africa and such. I think that's a great way to go. Great business model, royalty and streaming. I've been a big fan of that for a long time. Last question, if you have time, what is coming in the pipeline for Uranium Royalty Corp?
Well, we can never rest on our laurels. So we got to celebrate the Cigar Lake and MacArthur River announcements, but we're already very actively engaged at pursuing the next deals, and we're very keen on additional exposure in Canada, but we're also looking in Australia, Africa as well. So working very hard on that front. On a corporate side, we also believe that we need to have a bigger presence in terms of the investment potential of the U.S. market. So we are traded over the counter, but we're actively pursuing a New York Stock Exchange listing, which would certainly make it easier for U.S. investors to buy and sell our shares. So we're very excited about 2021. 2020 was obviously not a typical year for anyone, to say the least, but we're really hitting the ground running this year and looking to grow this portfolio and build shareholder value.
Absolutely. It was quite a year, 2020, and I expect big things for 2021, especially for your company. I've been speaking with Mr. Scott Melby, CEO, President, and Director of Uranium Royalty Corp. On the TSXV exchange. URC is a ticker symbol. In the U.S., it is URCCF. I recommend checking it out. Always do your due diligence. So look at the website, at the very least, uraniumroyalty.com, before you make any investment at all. And I highly recommend checking it out, though. Mr. Scott Melby, we'll have to have you back on the program for an update very soon, especially when, as I predict, uranium prices will be much higher. Thank you for coming on, looking at the market, sir.
Absolutely. Thank you, David. Take care.